The great aim of education is not knowledge, but action. Herbert Spencer. That is what we teach, action. We want you to practice trade with us. As you learn, immediately start filling out your trade worksheets, your daily market worksheets every day except Friday when you fill out the weekly market worksheet. Those worksheets are in your show notes every day. They're PDFs. You can print them out and use them. They are free. At the end of today's video, I'm going to put in all three of the trainings that show you how to fill out the daily market, weekly market, and trade worksheet. You do it while you are listening to the program. 10 to 15 minutes a day. That is all we ask. If you will do this, I beg people, just do this. You will figure it out. It will all come together. You will get it. If you want to supercharge that training, of course, buy the book, become a Patreon supporter, get those special trainings we have for them, the monthly question and answer session. And then, of course, when you're interested in options, we have that 3-part series at any of our Patreon levels on Options Made Simple, the Charting Wealth Way. Again, thank you for all your support. Let's jump into these charts. We see the S&P 500 up for the day, gold up a little bit. Bonds and the NASDAQ 100, the tech stocks, are down. And FYI, you see Bitcoin rebounding a little bit at 5.62%. But I wouldn't be buying Bitcoin right now. Why? I'll show you at the end. Now, let's jump into, and again, we're not a stock calling service, not a Bitcoin calling service. We're an education firm. I always am talking specifically about practice trades, not real money. Okay, let's jump into these charts. What do we see for this week so far? Well, the S&P has reached $380.58. How high was it last week? 381. So we're not reaching a higher high yet. We do see the candle trying to move up, but look at that price percent oscillator. It's flat. Derivative oscillator losing a little bit of momentum. So things slowing down on that weekly chart. 2-day chart. What did we see happen at the close of the market? Well, we have a red open box candle. That means a slowdown in the up movement, not reaching a higher high. Technically, do we have a 2-day recross? Barely, 0.02 points. Yes, that did happen at the end of the day. How many of you jumped in and practice traded that? Hey, I'm all for you practicing it. I hope that you're filling out your trade worksheet, that you're noting your reasons why, that you're noting that you had a red open box candle on that 2-day chart. That could be something that you might use in the future. You see, folks, the reason we fill out the trade worksheets, the reason we document what we do is so we can look back and say, that trade didn't work. Why? What were the variables? Well, it was a red open box candle. Now, maybe it does work, and maybe that convinces you that, hey, those red open box candles aren't always that bad if this works. So pay attention, note things, write them in your trade worksheets, and of course on your daily market and weekly market worksheets. Now, we do see that we have a red open box candle not reaching a higher high, price percent oscillator just barely crossing over, derivative oscillator going positive. Look at the half-day chart. Again, down in the morning, green spinning top in the afternoon, barely up 0.02%. Price percent oscillator still positive on that half-day chart, but the derivative oscillator peaked out back on Friday and has been sliding sideways and down since then. So as far as price goes, we'll keep watching, seeing where that leads us. Now, what about the NASDAQ 100? Red open box candle for the week, not reaching a higher high yet, I don't believe. 319.39 last week, 317, nope, not close. And again, when we draw let's try to draw a little bit more useful trend line. And again, we're right there on that on the weekly chart. Look at that price percent oscillator getting awfully close to crossing over, going down. Now, that is the weekly chart. Derivative oscillator losing momentum. Look at the 2-day. It was trying to cross over and is doing what potentially? Bouncing off. Now, that's a hard call to make on a bounce off being down 0.16%. Did anybody look to see if indeed you wanted to treat that like a pull away. I don't know. We'll wait. We will see. Doesn't put us into any trade. Why? Because the weekly is still in a confirmed up move. But again, we have to just wait and just watch that, see if that's going to keep pulling away. Derivative oscillator sure is gaining energy. Now we go to the half-day chart. What do we see there? We do see a crossover going down. Now the half-day chart doesn't get us into or out of anything. We prefer the medium term and the long term, that is the 2-day and the weekly charts respectively, but it does show us lots of down movement in the morning, not as much in the afternoon, but crossing over in the morning, heading down. So we'll keep our eye on the prize, see where these charts are going to go. Is this it for stocks? Are they going to keep climbing higher? Well, it's not giving us a positive signal at this point. We'll wait and see, and the charts will tell us what to do. That's what we do. We trend follow. That's why it works for us. That's why it's easy. Not easy all the time, but it's not rocket science either. What do we see going on with 20-year bonds down 0.08%? Still moving down in the direction of that 2-day recross going down. Weekly still a confirmed down move. Price is well below the weekly trend line. Price percent oscillator kinking over, going down. Derivative oscillator gaining downward momentum. Look at the 2-day chart. Again, quite nice. Our jumping in point on an inverse trade on bonds, somewhere around the 154.83 mark, well, 155 we'll say. And how far have we plumbed? What's the low so far? 149, so not bad in 4 days, not bad at all. And again, hope that you set your profit and loss bands. Very important to do that. Profit and loss bands, extremely important. We love them. Hope you've taken that training again to get all of our trainings, particularly those daily trainings that we put out for you. Those are all available. All of this stuff is available for you for free. Just go to chartingwealth.com, sign up for our daily and weekly reviews, and you get all this stuff. So we will continue to watch and see how that daily chart continues to move down. We see down in the morning, a bit of a recovery in the afternoon. Still for the day, down 0.08%. Looks like it could be bottoming out. Price percent oscillators moving up a little bit. Derivative oscillators been losing momentum since it peaked back on the morning of the 8th, Friday the 8th. But continuing to move down though, so we'll keep our eye on things. Remember what the price percent oscillator is. It's a percentage version of the MACD, moving average convergence divergence indicator. What is the derivative oscillator? It's a triple smooth version of the relative strength index. So what we're seeing is when we see that derivative oscillator growing, and you can look at these candles and you can see an acceleration in the down moves. Once the down move slows, that's where we see the derivative oscillator losing that momentum as you're not having increases in price over itself as it moves down. It's slowing there. That's how we use this. And of course, what do we like the best? We like it when we see the price percent oscillator and the derivative oscillator cross over at the same time. Makes us feel even better about the start and the potential continuation of a move. Don't have to have it. Didn't have it on this 2-day. I'm sorry. I'm not looking at the right thing. We did have, I was like, well, why are my notes not correct? We did have it on the 2-day. We had the derivative oscillator and the price percent oscillator crossing over at the same time. Always makes us feel better. Not so worried about what happens on this half-day chart. It just helps us see some of the smaller movement. Enough there. Let's leave and go to gold. What do we see going on gold? Check it out. After 5 weeks of up movement, trying to move up, reaching not every week higher highs, but it looks like it reached higher highs all but 1 week. So when we look at this week, of course, first red candle we've seen, in 5 weeks. Price percent oscillator never had enough energy to cross over going up. It failed, pulling away, heading down. Derivative oscillator still losing downward momentum. We'll see if it starts gaining that. And again, look at the 2-day chart. Again, see things continuing to move down. Didn't cross over, so we don't have a recross yet on gold. That may be happening by Thursday. Remember, we finished today's candle, so we'll have a Wednesday, Thursday candle. Perhaps you'll have a 2-day recross and the ability to short gold. Now, there is no good gold inverse fund. ZDG is one, but the spread's too wide. Remember, we don't buy anything that's not liquid, and the spread makes it not liquid because it's too wide a spread between the bid and the ask. That's the way you determine liquidity. I have a great teaching on liquidity for you. We'll put that out again soon. For those of you who've taken it, you know what I'm talking about. We also talk about it in the book. Liquidity is important for you to pay attention to. So what do you do if you're going to short gold? We recommend you practice trade puts. And like I said, how do you get that options training? We have it at any of the 3 levels of support at Patreon. We'll provide you with those 3 trainings, and they are phenomenal. Options made simple the Charting Wealth way. So we're waiting. By Thursday, maybe we'll have a crossover going down. What's up with the half day? We can see where gold maybe is bottomed out. Maybe that's not going to happen on Thursday. But you know what happens so much of the time when things move in directions and then sort of settle? The market digests that loss, and it either moves in the opposite direction back up or starts moving back down again. And you know what? These charts are going to tell us that as time moves on. We'll take our time, do the right things, think about it. Hey, Bitcoin. Remember we had that big drop yesterday, 21-something%. Well, look at where Bitcoin is now for the week, just 2 days in. Price percent oscillators flat. Derivative oscillators lost some momentum. We go to the 2-day. It's still positive, but we have a red open box candle forming, means a big slowdown in the up movement. Now the derivative oscillator also losing momentum. I said I wouldn't be doing a practice trade on Bitcoin right now. Why? Because even the half-day chart is still negative. So, you don't buy when there's no good reason to buy. Now, could it boom up tomorrow 20%? Hell, it's Bitcoin. Yes, it could. But that's what you call gambling. I want to see this half-day chart cross back over going up. Now, that is my least favorite reason to jump into any trade. Why? Because typically, because it's a shorter chart, doesn't work so good. But when we backtrack on Bitcoin, we can see that this shorter chart has not been all that bad. So, again, keep your eye on things. I don't encourage you to jump into anything foolish, but you're just practice trading. So live, learn, experiment. It's all about that. And of course, you remember our quote for the day. The great aim of education is not knowledge, but action. And if you are not practice trading, if you're not filling out your trade worksheet, daily market worksheet once a week, my friends, you are missing out on 90% of what you ought to be learning. And what is more important than being able to track the market accurately? It opens up a whole world of wonderful possibilities to you. That's it, my friends. God bless. All the best from the whole team at Charting Wealth World Headquarters.